Good morning, everybody. Welcome to the Flow Show. Another quiet day going on. Just the world ending and then unending and then ending again. I'm glad it's a fucking short week. Kay, are you alive?
Hello, everybody. Good morning, Ryan. I'm just having trouble to keep up with my Control Alt Delete Restart. Yeah, it's getting a bit worn out.
Yeah, go to bed expecting one thing and wake up to a whole shit show in the morning. Such is the nature of things right now. All good
Only
fun.
1,332 days to go.
Yes, can't wait. Can't wait. Right, let's get through all the unimportant stuff first before we get to the important stuff. So this might be just a bit of a quick fly through. Over in Japan, Finance Minister Kato spoke with Besant and agreed at the next G7 shindig that rates should be set by the market, and there was no talk of an FX rate target with Besant. So exactly the same as what happened at the last G7 thing. They got together and spoke about FX. Absolutely no change to what they were talking about. So I really still don't know why they went through the bother of reaffirming what they'd already reaffirmed previously. But that's the Japanese for you. PM Mashiba is going to have a call with Trump sometime in the Japanese evening, which is about now. So we'll see what that produces. RBNZ's Hawksby says we do see growth headwinds in the new term. In the near term, and that commodity prices may stay elevated, shielding the New Zealand economy. A few of those pods speaking after their rate cut yesterday. ECB's not says near-term inflation and growth risks are to the downside. So the monetary policy stance should be neutral. ECB's Victory Vilroy says more rate cuts are possible in the coming weeks. He doesn't see inflation picking up in Europe. Kestrel Casimir is in hot water. He's been found guilty of corruption and bribery and been fined 200,000 euros, though he said that he doesn't plan to resign from the post of governor. How Lagarde and the rest are going to take that, no idea. He's not the first ECB bod to be caught under such circumstances. So we'll see what happens with that. Over in the US, there was a 5-year note sale yesterday, which had a softer bid to cover ratio, 2.39 versus 2.41. However, the good news from that was that indirects were higher at 78.4%. So that indicates potential foreign interest, which is good for such things. So not all that bad. An auction. There's been no real data out. Just looking back, nothing really this morning. We had the NBA stuff yesterday. No big deal there, though the 30-year rate did tick up a touch. We had some regional numbers coming in, less crappy than they were before, but on some of them and worse on others, but still all negative numbers there. So regional manufacturing and service numbers not looking too good. We did have the FOMC minutes, nothing too much that we didn't already know, but almost all participants commented that the risk of inflation could prove more persistent than expected, and that the Fed may face difficult trade-offs if inflation proved more persistent while outlooks for growth and employment weakened. Banxico gave themselves a reason why they will continue cutting. They slashed their growth forecast for 2025-2026. Now see GDP 2025 at 0.1% from 0.6%, and they halved their 2026 forecast to 0.9 from 1.8%. Banxico's Rodriguez commented that they continue to see rate cuts coming. OPEC meeting, they decided not to do any changes, and what they did do was pretty much say that they're going to use their 2025 scorecard as their baseline for 2027. So it doesn't look like any changes coming soon for that. Ukraine stuff, Russia stuff. Putin says apparently, according to sources, that for Ukraine peace, he wants a pledge to halt NATO enlargement. There's a NATO shindig going on shortly. But German Chancellor Merz has weighed in a little bit and tipped the scales into more of a risk-off situation, saying we are financing Ukraine-made long-range missiles with no range limits. The Kremlin was quick to reply to that, saying Merz's statement on long-range weapons provokes war. This is something that has been ongoing. Various Western countries that are providing arms to Ukraine, particularly missiles, have said that they need to be limited. They don't want too much flying into Russia. But Merz is getting around that apparently because the Ukrainians are making them, even though the Germans are paying for it, and they will have no range limits. So it is a potential step into a worse situation. Putin's aide Medinsky said Russia has offered Ukraine an exact date and venue for the second round of talks. That's said to be the 2nd of June to exchange memorandums on a peace settlement. Apparently, Ukraine has already put forward its memorandum, but Russia has still yet to do so, and everyone's telling them that, saying that they're delaying things. Right, to the matter in hand. And if you're waking up this morning, or if you've already woken up this morning, you'll find that apparently Trump's tariffs are now illegal. A court ruling overnight put pay to all that. As you can imagine, markets have gone a bit potty. Trump is obviously appealing what's going on. There's a million different ways around all this situation. Long story short, we've got this court ruling. Trump's calling it a load of old guff. He's going to appeal. There's ways, means, and other options of circumventing it all anyway. What it's done largely is it's created more uncertainty. The market has, or the dollar's rallied on the back of that, but that's all being reversed as we speak because the market's realizing it's really not going to change anything, and it probably won't. In fact, it could actually make things worse if countries kick back and say, well, those tariffs you slapped on us 2 months ago are all illegal, so we're not going to pay them, or we want our money back, and this, that, and the other. So this could get far worse than the positivity that we've initially seen this morning on the back of that. The UK has been one government that's responded, and they've said on the US court ruling, these are matters for the US to determine domestically, and we note this only as the first stage of legal proceedings. So the UK is not willing to weigh in and say, take your tariffs away, Mr. Trump, because they're illegal. But a lot of countries are watching. Uncertainty is rising again on the back of that. Kay, what are we doing with all this? You don't know what, 1 minute you want to be long, next minute you want to be short, next minute you want to do this. It's like a roulette wheel trading at the moment.
Exactly. And as I said, we've got still 1,332 days of this. I mean, it woke me up because I had a few alerts, and obviously waking up in the middle of the night, we can hardly think straight most of the time. But after thinking a bit, I mean, as you were pointing out, and we already read several people, really specialists or trying to be specialists in the matter. There are several ways around. It's one of those where nothing is done until everything is done. It can go as far as the Supreme Court. They can use other means to try and reverse that decision as well. So we're actually back. We're not back to where we started, but we have no clarity on the matter right now. We can only make how shall I say estimates of what could potentially happen in both cases, whether they are held, whether they are in the end, by the most minimal chance possible, being abolished, those tariffs, what may happen. And You know what? I mean, apart from being potentially short-term positive because no tariffs means that US companies can continue to import at um, pre-tariff levels, let's say. For the rest, I fail to see many positives in it because imagine that it happens, no receipts from tariffs, yet tax cuts, the big beautiful bill, is going to leave even a bigger hole in the chest. And yes, it's going to then push yields higher because of that higher debt needed to be funded and not by tariff incomes, which in the best of cases with 10% tariffs would fall short of the big beautiful bill expenses anyway. But I mean, I can't see too much good happening. Wouldn't it be short term that no tariffs? People are perhaps more positive on US companies and stocks may fly. But yeah, as I say, I mean, there's still so much that can be done and will be done for sure. That it's a I don't see it as really uber positive dollars. And I guess looking at the reaction that we had, and again, this thing came out in the dead hour in Asia. So we had this initial reaction of people saying, okay, no tariffs, we need to unwind the trades that we have put on when he slapped on the tariffs. So it could actually be a positive dollar. That was really, uh, let's say, relatively short-lived. We are back to levels where we were basically before it all happened. But yeah, loads of uncertainty still around that.
Yeah. I mean, as soon as I woke up and saw that headline, my first thought was that, well, Trump isn't going to stand for that. He isn't just going to go, oh,
Yeah,
okay, then, and cancel the last 3 months of what he's been doing.
yeah.
I luckily, fortunately, hit dollar yen at 146. That was purely just a headline. No, that's a load of old bollocks. I'm hitting that one. But where it goes from here is anyone's guess. You know, another headline
Yeah.
later on, we could be back at 146. You know, you got to roll with the punches at the moment.
Yeah, I sold a few dollars as well. Well, I actually got stopped on some of the positions I took yesterday because of
Yeah,
it. And then,
same.
but then, and waking up, I just said like, okay, this is you know the second thoughts and the third thought about it. This at best is going to last 10 days, but it could last 150 days or even more. Who knows? You know,
Yeah,
if you read the different specialists talking about it, so. I mean, there's nothing is done. So yeah, I re-entered basically the positions that I had. The good thing is that it put my sterling yen a lot higher, so I could I could hedge my option a little bit. But yes, loads of uncertainty still around this.
yeah, exactly. And we still got in the month to deal with. I mean, same
Well,
as you. I was tapping this at 145 yesterday
mm,
before the fix. Managed to get some slices off down to there, and then boom, back up. Then I had an order overnight, which I left in. That got triggered and stopped 6 minutes later, and the rest got blown out. So
mm,
you just can't legislate for stuff like that. You just got to make sure that your risk is covered as best as possible. So if you do get these swings, it doesn't do too much damage. I actually managed to make a few beer pips purely because I did this slicing in here. And when I added back, I didn't add back as much as I cut. So that's the way we trade it at the moment. Ali, I'm going to come to you, mate. I want to point out, okay, we're not a clinic here, okay. We appreciate your input. We appreciate your views and what you want us to talk about, and we do look at your trades and get into your trades, but we're not going to go through 10, 15 trades and analyze each one of them for you, mate, because there's other people here on the show. There's other stuff we want to talk about. If you want that sort of in-depth analysis in your trading, come and join us in the chat room. That's what it's there for. So yeah, we appreciate it, but we're not a clinic here, mate, to spend all the show going over 5-6 different trades. So we do go over one or two, but yeah, if you want that sort of in-depth stuff, come and join us in the chat room, mate. There's no excuse. If you're making money, Invest in your future. Anyway, let's move on. Kay, any other news you want to pick up on while I whiz through the main headlines?
It just overruled everything. I mean,
Yeah.
it's like every time you wake up, or every time we have an American session, you just delete all the emails that you got before and all the alerts and start all over again. So now, and yeah, I think the most well, the headlines to come now are still going to be geopolitical, because there's still there was this pretty alarming headline from the U.S. What is it, spies or security services, saying there's a high risk that Israel could actually strike some Iranian nuke plants. But perhaps that's again one to watch over the weekend, and then yeah, and for the rest, things that are completely overshadowed by what's happening again running that tariffs.
Yeah, absolutely. And yeah, we need to see how the US is going to react when they start walking in shortly. So that's something to keep an eye on. Now, one thing I would say, when you're in markets like this, you really need to watch your charts, watch your levels, make sure you're protected. But also, stick to your big levels and note what's happening here. 145 was my resistance level yesterday. Now I need to watch to see if it's my support level today and what it's going to do from here. I've got a feeling, and it's just a spider sense, that given the way this court stuff has come out, it could actually be a much worse situation for the US. Uncertainty has been ramped up, and that's not what investors like. So while we've had this little positive move, oh, great, no tariffs, the reality is tariffs are still there. They're probably going to be, the ruling is going to be circumvented. But in the meantime, investors are going to go, what the fuck is going on in this country? And that's not good for the dollar. That's not going to be good for things like bonds. So I would not be surprised if this news becomes worse than it was better, and we see the dollar having a little bit of a wobble today. But you've got to be judged on the levels showing up. Euro dollar, I've been saying pretty much for a few weeks, all I'm interested in is what happens at 112 or 115. We had all this noise previously. We came down to 112.10, held it, and now we worry about whether it's going to bounce all the way back up to 113, 114 or wherever. But I don't know what you're thinking, Kay, but I just got that inkling it might get worse from this point, just because of that thought that investors are going to be throwing their arms in the air.
Yeah, I mean that's exactly what I said when actually in our chat room when I woke up. I said I understand the reaction. Well, I understand the reaction in the market, and the whether it be model driven or asset managers or so getting those hits. Sorry, that if you see something around tariffs that may be abolished, that you have to cover part of the positions that have been built up. But I mean, this is such a clownesque situation that I'm completely in agreement. I think it's going to get worse for the dollar before it actually improves on the back of this. Now we may be completely wrong, and there may be those what is it, law number 32,576, and all of a sudden all the asset managers start to buy dollars. I don't know. But I really have not the slightest confidence in the dollar right now, I must say, and it is potentially getting worse for the dollar before things even improve. And that's exactly what I'm saying a lot of times, and what we've been talking about here on the shows as well. Uncertainty is not good for investors. Investors want to be in something where they at least have certainty, whether it is on the good or the bad side. But if they have certainty, if they have stability, and that's one thing that is completely lacking now in the US. If you need stability to attract investments, and and I think there is no such thing right now because we can't go to bed, or there is another headline throwing everything around. So that is where we are now, and where I am at now. I'm still biased short dollars for as long as there is nothing that tells me, okay, now US Inc. is starting to reap the benefits from everything that's going on, like the Build America, Buy America, whatever, and But show me the money, right? Show me where the money is made, and I'll be more than happy, because I'm a trader. I'm not like we build a bias in trading, but I'm not like shy. I've been buying dollar yen for years before, but the thing is, I won't be shy to start buying dollars if the situation warrants to start buying dollars for the more medium term. No problem at all. But for the time being, I don't see what's going to push me over the edge to start to do so.
Yeah, yeah, and there's nothing wrong with buying dollars, even if you're a dollar bear intraday. You know, if you see a trade, you see a trade. That's neither here nor there. Nothing should, restrict you from trading, and your bias certainly shouldn't restrict you from trading. That's why we try and be objective. James asks an interesting question: is there going to be more uncertainty, and does this push any rate cuts further into the distance? Yes, I think it's possible. Central banks don't like to move on uncertainty, and particularly for the US, if they're in the same boat as all the investors, they don't know what's going on. Their best bet is to sit on their hands. So could they sit on their hands for longer? Absolutely. But as we know, with what's going on with all these news and headlines, it could change next week. Next week, Trump could announce 25 trade deals that have reduced tariffs to minimal levels, and then everything's tickety-boo. Right now, as he sit here right now, it probably does make the Fed's job a lot harder, all this mess, which then pushes them to potentially say we're not ready to make any moves unless there's some financial stability problems coming. But as I say, that could change next week, and we ain't even got through this week yet. Going back to the yen, also need to bear in mind that we've still got this overhang from Japanese yields, which have continued to creep back higher after hitting some lows and getting that news from the Ministry of Finance, or that rumour from the Ministry of Finance, that they might lessen supply in the long end and put it all in the shorter end. But this is creeping back up again. So this is another reason why being on the wrong side of dollar yen, you need to be watching it, because this could be coming back down again just purely on yields going up, or the yen strengthening again just like it was before. So keep that in mind. US yields, obviously a big play, with back above 450 in tens, looking softer again, but we're going up in yield, down in the dollar. So you can tell what's at play here. Again, it's a dollar risk trade once again. So you've got these switches between the sessions, between the time zones, as to what's influencing what. So that for the dollar, you're going to be needing to watch what happens in the US session. If the market ramps yields higher and takes the dollar lower, that will be a clear sign that investors are saying, no, thank you very much. You want to borrow our money, we're going to charge you a premium for it, but we don't want to invest in you anyway, so we're going to take our money out of the US, hence the dollar selling. So watch for those clear signals today of what's driving what, whether it's a dollar move or elsewhere. Really, it's just, as I said, it's just level watching. Doesn't matter what pair you pick, set your edges. Here we go. I spoke about this yesterday. Ali asked about 139s. I said, no, 138, 60, 70 is my level. What do we get to? 60 before pulling it off. So, yes, you can have your levels, but, some have got other levels. I've got different levels. 139 is a level, but 138, 60, 70 is a more important level. I haven't traded it, but, we watch markets, we watch prices, we watch how they react, and the levels show up. Dollar MEX, I was fearful for that yesterday. I said if we broke above this old fib, 1936.37, we could be pushing higher, up to 41s, 42s. And where do we get to? 41s, 42s. So this trend line that a lot of people have been watching got broken out of as well. Now we need to watch a retest. We're just mooching around this level at the moment. If we hold here, then every chance of pushing up to sort of 1950s even more. So a bit of a turnaround in some pairs, not in others. Right, okay, I'm going to punch it over to you, mate.
Stay on there, Ryan. Stay on there.
Yeah.
What's interesting now, if you look at the mix in the Canada, you have to think. Well, that's my view at least. You have to think also not only dollar wise, but those two currencies, the Canada and the Mex. Never forget that they are part of this USMCA or deal or trade organization or whatever. So sometimes when you see moves in the dollar elsewhere, you're going to see either less or more moves as well in the Canada and the Mex, and that is something that you need to bear in mind. Yes, we've broken above that trend line. The dollar was actually going up on versus everything on yesterday's fixing, right?
Yeah.
No exception in the dollar cat and in the dollar mix. But once the fixing was done, those two stopped. And even when Trump came out with, no, sorry, the U.S. court came out with that news, we could see that the Canada and the mix actually underwhelmed every other move that we saw in dollars elsewhere. So bear in mind those two and trade them from a bit of a different angle. Obviously levels, but also bear in mind when you trade Canada and mix that you are trading an American block trade somewhere as well.
Yeah, and you said they underwhelmed. I'll let you talk about the Aussie dollar. I don't think anyone bothered to wake it up for that news. It
Well, luckily,
slept through it.
yeah, luckily, so my position was intact.
Yeah, right. All yours, mate. You're on mute, mate.
Sorry. So yeah, looking at a few things and looking at a few dollar pairs, you remember on prior shows I said we have been to very interesting levels on a lot of dollar pairs, and then the dollar made a comeback. And now we are looking at somewhere the other side, but just look at what happened over the news that we had overnight. Is we broken through those intermediate levels, went on a stop run in a lot of dollar pairs, but we left major supports or bigger supports untested, and I think that's interesting. And if you're going to look across a certain number of pairs, if you trade intraday, you probably, or you may have traded around this 134.45 in the cable, but now we are already back above. You see, that is what we were talking about as well. We don't really trust those moves that we've seen during our night. But have a look at a bit of the wider levels, even if you're an intraday trader, because you look at this cable here, every try that we had under 134 got bought. It was a prior high as well, prior low here, prior high here. So this 133.80 figure is still going to be important, and we could not reach there. So before we test this zone here, I would say the overall picture is very little changed, bearing in mind we did bang our head here. So I would rather say we may be in for a bit of range trading, say for any world-shocking news, of course. The interesting one on the Aussie dollar is that we went to test this little channel here, also held and came back to what is I would say the new neutral. It was a big level in the past, but now we are going up and down, up and down. We always have a little bit of a stop there. So it is a tube station on our way to anywhere this Aussie dollar wants to go, but we are stopping again around 64.40. We are exactly on it, but keep an eye on, and it's also that prior low from the 23rd, 64.0510. That's your little channel, but I would say, and then I'm coming back to what I said on the cable as well. You test intermediate levels, you even break a bit below some, but if you look at here, I've always said, like, look at what happened here. three very decent tests of 63.90 on the Aussie dollar when it held, and it's left untested. Okay, so that's a bit in line with what happened on the cable, and the Kiwi did relatively the same. Okay, back through a bit of support here around 59.30, 59.40. We went to retest the prior low, but we left the 59. We left the trend line and challenged, and more importantly, we left 58.90 figure unchallenged as well in the Kiwi. And then we look at the other side again. We are back around the midpoint of where we were trading. This is our hinge again, and we are back there. That means the market comes back and says like, okay, well, we've done this. This has happened. Now, what are we doing next? And there's a lot of questions asked in the market, I think, about what are we doing next. And again, if you look at the top side of the Kiwi dollar, then big zone 60, 30, 40 also still holding. So I think we are in reflection mode on a lot of currencies for what the fundamental play, or for what the investor play, or the people who need to do stuff, or need to think about what they are doing. I think we're in a bit of a reflection mode here now. It can move on intraday, and Ryan already said we are in end of month as well. So watch those things, those moves around the fixings, those moves especially into the 4 p.m. London fixing today and tomorrow, guys. Okay, tomorrow as well, being a Friday and the end of month, it's going to be a funny one. And a little bit of a spoiler, we'll also have the MSCI reweighting tomorrow. If I notice that correctly, some banks were calling for that as well. So that may add an additional level of volatility into tomorrow's day. Okay, so watch out what we do, but also, and that's what we always say here, once the moves are done, watch where we are. All right, so we could have those violent moves, but the only thing I note is that top ends we're holding and lower ends are holding, even untested. Okay, that is, I think, the lesson of what we saw over the past few days. Did you show your dollar Swiss, Ryan?
No, I didn't. No.
Because that's I think it's a very interesting one, and Ryan showed it yesterday, and I think it's really interesting what happened here around that 82, the figure. But watch out what we do. Remember, we were talking about that 83.35, 1, 2 spikes above. Keep an eye on that one. It all joins those little levels, because if you look at that 83.35, we were trading, and we have traded that level a lot of times, and it all joins what's happened on the dollar overnight. Okay, so we do have levels to compare and to yeah, I mean, bank positions against, or if you are in short-term positions, watch out if we break those levels. Okay, these are things, and we are in a lot of different scenarios there, and a lot of different scenarios come together for what the dollar is concerned. Okay, gold broken through that 32.75.80 finally on this overnight news, but we are holding the next level. Again, another one, 32.40.50, which I mentioned on the prior shows, if we would get below, and we held it, and we are bouncing. And again, there, I think we're in relatively neutral territory right now with 32.85. We could raise back up. And don't forget what I said yesterday, there are fixings in metals as well. So we could raise up. Do I see any fundamental reason to break out of that triangle? No. Could it happen on the headlines? Obviously, because we had so much of those moves already. I think 32, 33, 35, 40. Again, we are watching, but here, this is a zone again. If we would go up to that zone, watch where we come out this month and start the next month. I think this could be very important if that is the level that we trade at. Okay, the other side, obviously, still those 3170s, 80s, 60s, with a Trump level perhaps around 3120 or so. But I don't see too many reasons why we should move out straight away out of this triangle, let alone that break above that big level. If that breaks, something strange or something bad for global risk, I think is going on as well over here. What else? Somebody asked me to look at Kiwi and Derish Kiwi and I haven't really traded a lot of those yen pairs. I only traded sterling yen right over the past week or two. Um, well, I dare to say relatively positive, but again, this zone here, 87.20 up to 87.65, interesting traffic area, I would say. So worth a gander if it goes up there. Fact is that we held this level around here, 84.60. That's a bit far. Intraday 86 the figure, I would say. Keep an eye on what's happening there. 86 the figure, because if you look at it, it's a bit of a low here, high here. Yeah, high lows around here, high here. Yeah, 86 the figure, 87 1565 on the top side. Okay, there is. Euro yen, it's all about the same thing on those yen pairs. We saw a bit of a comeback on all those yen pairs. Oh, this looks a bit nasty to me. I mean, I don't. Whoa, let me clean that stuff up a little bit. 163.80, 164.10. This is where, oh, look, this is where we've been trading a lot. So look at where we are once the day progresses. Ali, the 163.80, 164.10. On the downside, I would say that's a bit far away, but it's in yen terms, we have been doing that, over the past days and weeks. If you look at those moves, they're pretty violent. It's 162 the figure. I mean, if you want to trade anything intraday, 163 figure 10, perhaps. But I think the major one would come in around 162 the figure before even starting to think about 160s. But we could be around a bit of a pivot here. Well, intraday, you may risk if you want to. Sorry, if you really want to, you may, yeah, around the 163 the figure, 162.95. But then watch out if we get below, because we could relatively rapidly be back down at lower 162s. Did anyone else ask for anything else? Oh, I wanted to show you one yen pair that I have been trading. Sterling yen, look at where it stopped, okay? 196.40. I said a while ago, I think there is some positivity, but I didn't really want to push the boat and have cash position, so I rather had an option. So that is doing relatively okay right now. Hedged already a few into this resistance level. It is relatively interesting, okay? 196.30, 35, give and take a few algo pips all the time in yen pairs, but keep a very close eye on that one. And I would say especially for the moves that if we see any late fixing also moves, because if we would see something like, because I've got like some impression that sterling may be an okay currency going into month end again, but on the tip of my toes. But if you get like a bit of a runaway, although yen could also be bought, of course, but if you would get a bit of a runaway, be careful for what happens tomorrow evening. Okay, and we could go on a bit of a wander above or walk above in the next what is it, 25 hours or so, but then be careful, okay? Really, that is what I had to say. It's an important level around here, okay? And I think it's important enough to pay close attention to. I think I've done sort of, yeah, but you know what I told you on the euro sterling, okay? It is still going down, but the only reason why we are here now, Ali, is because the euro got a bigger hit than the sterling last night. And yes, euro sterling is going down, and you're right that level 84 figure 15 is capped now. Okay, so the price action tells us it is capped, but I would argue that the only reason we are here now is because of that news overnight. So I'm not inclined to push any euro sterling positions too heavily right now. And although if it's a fixing that brings us back here, I may give it a try just because of that level. But I won't hold it if it goes back above 84, 10, 15. But I'd rather have, I've got that sterling in, and I've got some cable, and I'd rather trade those ones. Although it's undeniable that this is still a pretty decent trend that is ongoing. Okay. With that, Ryan, back over to you, mate.
Yep, thank you very much, mate. And I just want to finish the show by just offering another piece of advice, as we often do. Okay, you can't do anything about things like last night. If you're in a trade and you get headlines like that, what can you do? If you're asleep, you can't react to it. You can't control markets. What you can control is how they affect you and your trading. Okay, if you're on the right side of it, you don't put the gift horse in the mouth and you take some profit. If you're on the wrong side of it, you make sure that your risk is covered and you are happy with your position and the risk you are taking, whether you're going to bed, going to the pub, or going wherever, somewhere where you're not going to be able to access your trading platform or whatever. And make sure, if you're happy with your risk when you made the trade, then it shouldn't be a problem if you get stopped out, because you were happy with that in the first place, irrespective of the reason why. That's why we use stops. That's why we use risk management, because
And
we
that's why
cannot
Ryan,
control. Yep.
and that's why Ryan and myself are still in the game, by the way, because we could
Yeah,
have lost several accounts if we wouldn't have protected our positions over the course of our career.
exactly. And so that's the only control you have, your risk and how you manage it. And yeah, so shit happens. You get knocked out of position. I got knocked out of dollar yen shorts yesterday. Okay, but does it kill me? No, because I was planning for that loss anyway. I always plan for the loss. Everything else is a bonus. And if you're mentally prepared for that, then yeah, you swear and curse, but you're already ready for it. So you move on to the next thing and you get over it. So yeah, you can't do anything about these things. What you can do, what you can control, is your trading, your risk management, and your account. And on that note, thank you very much, everybody, for coming to the Flow Show. Have a good day. Be careful. We have got increased volatility. Wait for the Yanks to come in and do their thing, and maybe we get a clear idea what's going to happen. Take care. We will see you tomorrow morning.